What's good, everybody? Mokama's Sunday service. Today, we're going to be doing an NVIDIA deep dive, given that they have earnings coming up this week. I think it's Tuesday, Wednesday. I'll give some specificity on that. We can look it up online. But this is going to move the market, right? NVIDIA, $1 trillion company. It's been the hottest company, I would say, over the last year and a half, at least one of the top five. Uh, and now it's coming into earnings. It's going to affect the entire semiconductor sector, the chip sector. So I thought it was important to kind of address this before the earnings come out. To be fair and upfront, I have 275 shares of NVIDIA. So I am invested in NVIDIA myself, as well as some other people on the Zoom. But that's why I think it's important for us to kind of talk about this. Right. So, number one, I feel like when people, like the average person on the street, has no idea what NVIDIA does, right? They know what Microsoft is, they know what Apple is, right? The consumer facing products, Google, Amazon. But when you talk about NVIDIA, they're like, what's that? There's no NVIDIA computer, no like direct product because it's mostly like a B2B business. NVIDIA is selling to Microsoft, it's selling to Amazon, it's selling to Tesla, right? This is a semiconductor or a chip company, right? But I really think it's important for people to understand what are semiconductors, what is a GPU, a graphical processor unit, right? For us, especially our generation, I'm talking about the people mostly on the Zoom. For our generation specifically, we remember the switch from like Atari to Nintendo, then to Sega, then to PlayStation, then to Xbox, Game Boys, all of that stuff, right? I know I specifically remember wanting that stuff for Christmas presents and things of that nature. And so we were like the first gamers. And we really saw the difference between the graphics in the initial games that were created and now all the way up to, let's say, like a Call of Duty now. Like it's a radically different. And one of the main reasons for that are GPUs, these graphics processors that NVIDIA makes. And has been one of the pioneers in the space that took us from like the 2D Mario Brothers stuff, just going from left to right over the screen and not being able to go back, right? To where we are now, where you got these worlds where you can go off on side tangents and side quests, and the people look like more real than actual humans. And in terms of the details and the lighting, it looks like you're immersed in this environment, and that's what these GPUs have essentially allowed us to do. That was the first use of a GPU over a CPU, which was the standard chip in your computer, right? To kind of run your computer. Now GPUs are primarily responsible for all of these amazing graphics that we have everywhere, in terms of being able to process things in real time, right? Then the next major use for GPUs, people realized that they could use these chips to mine Bitcoin. If you don't understand anything about cryptocurrency or Bitcoin, right? I don't invest directly in cryptocurrency, and I'm not saying that because it's good or bad or one way or another. It's more so because I don't understand crypto, specifically the individual cryptocurrencies like I do stocks. So I don't tend to invest in things that I don't know much about. But I do understand how crypto works and what the architecture looks like, specifically for like Bitcoin and whatnot. So in order to run these transactions on Bitcoin, to keep the ledger of transactions of things changing hands, they need computing power, right? It's one big computer, except it's not centralized. So what that means is they most cryptocurrencies will pay people with computing power like people with fast GPUs and the ability to process complex transactions on their computer, and they will pay them to mine Bitcoin, essentially using the computing power from different nodes of computers all over the world that act as a centralized computer for Bitcoin's ledger. Right. And then they get paid for that. That's not free because of the power that it takes, the computing power that it takes to process these transactions, the length of time that it takes to process these transactions. They get paid for that. And so people realize that these GPUs, specifically NVIDIA GPUs, were really good for Bitcoin mining and crypto mining. So that was the secondary use for NVIDIA GPUs that people found was useful, right? Why people bought GPUs outside of the gaming space, right? And why we saw NVIDIA's rise. And then now we have we're in the AI era, right? Now we're in the AI era where we have these LLMs like ChatGPT, Claude, uh, Gemini from Google, and the multitude of others that are being built on top of a lot of these platforms and Perplexity, etc. So um, people started using these chips, scientists, doctors, businesses, and started realizing that these chips they could handle more than just processing graphics, but that they could actually do a lot of complex reasoning, solve a lot of complex questions, transactions, equations, and mine data a lot faster than what we were doing previously. And so now we're in this AI era where people understand that NVIDIA has made chips to enable all sorts of things that we haven't thought about previously, or things that we didn't think were capable, and doing it at speeds, if you've used ChatGPT, that we didn't think were capable years in advance. So their GPUs are now being used for that. Their H100s, which was their main product that Facebook, Meta, uh, Tesla, Microsoft, Apple, all of these people were buying up chips. Now they're working on the NVIDIA Blackwell chips, which is, if you listen to the CEO, is already sold out. And that is the primary use for their chips now, in addition to cloud computing. I've talked about this previously before, and this is once again our generation, right, Anjan and Isaac, when we bought computers as kids or middle school, high school, you needed the actual processing power to be inside of that big, box that we called our computer way back when. Now, because of the cloud, and the cloud is ran on top of a lot of these GPUs, it's not really necessary for you to have as much computing power inside of your actual computer or device anymore. You really just need a screen and an internet connection, because if you've noticed, if you have Google Drive or iCloud or Dropbox, that you are now able to play videos directly inside of the platform. You can access your files directly inside of Dropbox or inside of Google Drive or wherever you're storing your data. And it's not really your computer running that anymore. It's you just have a screen that's connected to the computer inside of the cloud, right? So even like how computing works now, it's less dependent on your actual device, and more computing is actually happening inside of the cloud on someone else's server now, rather than you needing to have this mega computer at home in order to run any application or any software, right? So just something, I know I'm nerding out and whatnot and going into kind of left field, but this is just what these GPUs have allowed us to do. And that's why NVIDIA is so hot right now, even though it doesn't have like a consumer facing product like an iPhone or even software that everyone uses, like Microsoft Word or something like that, right? Or even cloud, like a Dropbox, right? Or even a cloud product. It doesn't really have that for us, meaning consumers. So this is just a blurb from an article on NVIDIA's actual site. I think it's from their blog. And GPUs, they said, have been called rare earth metals, like gold of artificial intelligence. And from a technical standpoint, but not to get too high level, they employ parallel processing. The way that that's different from old CPUs would have to do one transaction, then when it's finished with that transaction, then start the second, then start the third, then start the fourth. While GPUs, it can do parallel processing, which means it's like doing all three or four of those things all at the same time instead of having to do one after another. Now, don't ask me how they've designed the architecture to be able to do that, but that's why we're seeing like the increased speed of when you ask ChatGPT to write a 20-page paper for you, and it can do it within like a minute or less, right? So, um, yeah, and here it says the net result is GPUs perform technical calculations faster and with greater energy efficiency than the old school CPUs that used to comprise the computers that we grew up with in our computer labs when we were kids, right? And you might be a different generation out there. I'm talking about us 80s babies, right? So, um, another
About to say you showing our ages.
I'm talking about 80s babies here. That's all I'm saying. So, and that's what I'm saying, because if you know what Atari and Sega Genesis is, then we know where you're from. So, um,
Facts.
so the next thing, why is Nvidia right? And even though I bought some leaps in AMD, but why is it the number one player in the game? It's not just because it has the best chips. It also has made the best internal software to program its chips, and it has 4 million global developers that rely on its software platform. So it's not just that it has the chips are the fastest, but it has the most people that rely on the platform to build other AI apps and things of that nature. And so not only will you have to catch up with NVIDIA on the chip design side, you also would have to develop the software platform, and which AMD has, but you have to catch up to these 4 million developers that can spin up products on top of its GPUs faster because they're just more familiar with their software platform. And so this is another way where they figured out like more people are just using the chip and the software. So to get them to switch over to something else and learn a new programming language and have an incentive to learn a new programming language on a worse chip, it's just going to be hard to pry away their dominance in the sector. And so this is another reason why, and I don't think people talk about this. This is an important segment right here. I listened to the NVIDIA episode on Acquired. It's a podcast that talks about some of the greatest current companies in the world and ones that previously existed. And this is pretty much where I got this data outside of looking up this article was like, and listening to that podcast, just understanding what their competitive advantages were. And this was one that stood out to me was that not only do you have to produce a better chip, but you're going to have to produce a better software platform. And they're already so far ahead where more people are developing on top of their chips that is it's not just the chip either, right? You got to figure out how to get people to switch over and learn your new language or your new programming language for your new software platform when Nvidia is already dominant in that area, and you don't need to learn anything else to keep developing on top of their platform. So I don't I don't know who's going to be able to do this easily. Now, people are trying, specifically AMD, but like they just have a huge lead in that particular area. All right, now just going into their last quarter. Forget this is on their site. I don't know how they end up naming their quarters, right? But as far as we're concerned, in terms of the real world population, we're in quarter one of 2025, even though they have Q3 of 2025, which would have been last quarter. These are their numbers from their last quarter reported earnings, right? So they made $35 billion last quarter when they reported their earnings. Right now, I believe the analyst estimates of what's anticipated for this quarter is 38.15 billion. Don't quote me on that. I can look it up, but I know it's 38 billion is what they're anticipated to earn in this particular quarter in terms of gross revenue. Now, their main segment, as you can see, is the data center. Inside of that particular segment is primarily their chips, their AI chips, their GPUs, but specifically the H100s and the Blackwells, as well as like their networking revenue as well, and data center revenue. So, and then you got gaming revenues, right? Their gaming chips, professional professional visualization, their chips for cars, and some ancillary stuff here, right? But primarily, as you see, it's primarily the data center, which is their AI chips. And if you look at the growth of NVIDIA and why it skyrocketed so much, look at where it was like, what, 2 years ago. It was only making what 3.6 billion in data center revenue. It's 10x that in 2 years to 30.7 billion in the last quarter. But that's where the behemoth is, and it's because these chips are reportedly costing anywhere from like $10,000 to $40,000 a piece, which is why their gross margins are insane, right? They're making 35 billion and it only cost them 8.9 billion in cost of revenue, right, to actually manufacture the chips, or the cost to manufacture and design it. And they're keeping 26.15 billion after the cost to design and manufacture the chips, right? And then their net income is, damn, it's over 50%. That's crazy. Because what, 35 cut in half is about what, 17? Their net margins are over 50%. And that I challenge you to find any other company in the stock market, a publicly traded company, that has net margins over 50%. Because we've been looking at Amazon, Google, a bunch of companies, and even the best of the best are at like 25, 30% net margins. I challenge you to find a company that has 50% or greater net margins like NVIDIA does, right? So it just keeps more of the money that it brings in as well, which is why, once again, this thing has gone up so much, right? It's because it's growing revenue. And if you look at where it was like a year prior, this is the last earnings season, right? It went from 18.1 billion to 35 billion, right? So it doubled revenue. So that's 100% growth on revenue from where reported earnings last quarter. Same thing here. Just looking at, I don't know why they're doing a 9-month period, but in terms of this 9-month period, from 38.8 billion to 91.1 billion, that's more than 100x, right? And just looking at the breakdown, we kind of did that. Oh, we already had that slide actually. Looking at the breakdown, showing that just the data center and the compute is the actual chips. So when chip sales themselves, right, 27.6 billion the last quarter that it reported. And then a year before that, 11.9 billion, right? So you could see the growth. That is more than 2x. And then I always look at the balance sheet There are other things that people look at, like PE ratios, forward PE ratios, other numbers. But I always just go look at, man, how much cash do they have on hand? How much? What are their assets versus what their liabilities look like? So is this a company that can survive a downturn? So just looking at their total assets at 96 billion and their total liabilities are at 30 billion, that's a greater than 3-to-1 ratio. And like anything over a 1 is decent, but a 3-to-1 ratio, like that's like first in class, right? NVIDIA has more than enough money, cash, assets in case something happens to be able to survive, right? Because it has more than 3 times the assets than it has of liabilities. And like what were we looking at the other day where they valued the goodwill at like 24 billion or something like that? NVIDIA is only valuing its goodwill at like 4.7 billion, so I don't question this number as much. So yeah, this 96 billion versus 30 billion also looks really good. So from a fundamental standpoint, I love NVIDIA in general. Um, well, before we go to our weekly stock picks, the next thing I want to do, and I don't think that's what I forgot to do. I forgot to open up my platform. Give me a second. It's installing. Any questions though, just in terms of the NVIDIA deep dive, like why they have such a competitive advantage over others?
Well, yeah, it's up there. So far, no, thanks.
Yeah, not on this end, man. Actually, it was really informative.
Right? That makes sense. Like why they're first in class. It's not like it's not just one reason. And I think people are just like, well, if someone else develops a better chip, they're gonna beat Nvidia. And it's like, nah, that's not all the steps. And then the last thing, oh, I forgot about this. So the last major component of why they are more competitive and are more likely to win is because during the crypto boom, they started developing and manufacturing more chips with TSMC, or what's that? Taiwan Semiconductor. TSMC. Ticker TSM. And so they have a significant amount of TSM's capacity that's reserved just for NVIDIA. So even if you did get a better chip online, they already have a lot of the capacity of TSM's like reserved. So you might not even be able to get your chip manufactured at the levels that you want them to be manufactured at. Right? So
Mhm.
because of their relationship with the biggest fab in the world, which is TSM, Taiwan Semiconductor. So that's another one of their competitive advantages. And everyone thought that was a mistake during the crypto crash because, like I said, one of the reasons people were buying up a lot of NVIDIA chips before the AI boom was to mine crypto. And so they thought that they needed extra capacity so that people could keep mining crypto. And then the crypto crash happened, and everyone thought, like, oh my God, this is a terrible thing. And then right after the crypto crash, we had ChatGPT and all of these LLMs pop up who said that they were buying billions and billions of dollars of NVIDIA chips. And it just so happens that now NVIDIA has like 30% of TSM's capacity. So not only do you have to make a better chip and design a better chip, not only do you have to design a better software platform, you also are going to have to pry away some of their capacity from TSM, which has been a partner of theirs for decades, and that's their biggest customer. So, and then we all know right now that it's hard to get a fab up, right? Like Intel is looks like it's going out of business, or they're trying to trying to sell it, or people are hovering around it, maybe trying to acquire it, or there are talks about that. It's hard to manufacture chips. TSM has such a monopoly because it's figured out how to do something really difficult for not that expensive, right? And so, how are you going to pry away their capacity from TSMC? And they're paying TSMC billions of dollars every year, and they're a partner, you know. So, those are like three ways that it's going to be extremely, extremely hard for anybody to come up and challenge NVIDIA's market dominance. And in terms of its biggest weakness would be DeepSeek, right? Where we're talking about maybe it cost less to create these LLMs than what was initially anticipated because of what China has purported to have done. But as we've talked about previously, a lot of people just think that China got its hands on GPUs that were banned and spun up DeepSeek using banned GPUs, and it's probably not going to tell the rest of the world that it's using chips that it wasn't supposed to get to make their LLM. Right? That's the chatter out there, is that yeah, they're saying that it costs less, but do we really believe them? Or did they just buy up a lot of chips on the black market that weren't supposed to be sold to them? So I would say that's the biggest thing. That's the biggest hurdle is do do all of these massive Mag 7 companies stop buying as many GPU chips because they realize they don't need that much computing power? I don't know. I don't really buy that argument personally, because when has there ever been a better computer that came out and you were like, you know what, give me the slower one, you know? Um, that's just me personally. You know what? There's the M4, the M3 chips, M4 Mac chips are coming out. You know what? Give me the M1 chip. I don't need the fastest chip on the market. You know, I don't think people think like that. They always want the fastest thing on the market. So even if you could use some older, less powerful chips to spin up LLMs for any new projects, any new sort of technology that comes out, I imagine that you're going to want the fastest, best chips on the market at all times. So why would I downgrade and buy the least expensive chips, especially if I'm Meta and Apple and I'm trying to spin up AR projects and augmented reality projects? Like why am I using the slower chips? I assume I'm going to want the faster chips for all of these future related gadgets that we don't even know exist yet. At least that's my hypothesis. Anybody, and in fact, I mean, what do you guys think? Because like I've actually been wanting to bounce this off other people. What do you think? Especially Ange, you own some Nvidia shares. What do you think? Hello, you there?
Yeah, I'm just answering questions real quick.
Okay,
Another question.
never mind. Let's look at the stock price. Um, Here's what we've seen recently on Nvidia in terms of the stock price. So if you were if you were in Nvidia a long time ago, 5 years ago, let me pull up a week chart, a 5 year week chart. Right, you're doing like amazing, right? If you bought Nvidia at $10, like you more than 10 extra money, and you're holding on to this for life, right? So just looking at what Nvidia looks like right now, it's stalling here at like the heights, and we'll probably see when earnings happens whether or not it drops further, or if they do a blowout earnings. I wouldn't be surprised to see Nvidia get over 150 bucks and head back to the moon. But it needs to blow out earnings. So if they're expecting earnings of about 38 billion, it probably needs to do like 40, 42, 43 billion to like, I think, get past this all-time high at 150. And who knows? We'll see what happens though, right? But you see, it's come up, had these massive moves up, and it's kind of stalling out here at 150. But once again, I just went through the fundamentals of Nvidia. Right now, the fundamentals of Nvidia are amazing. Earnings periods are a time where that might change, where if it's anticipated earnings are 38 billion and then it reports 30 billion, then yes, NVIDIA is going to come down. But from a fundamental standpoint, looking at its prior earnings periods and its growth, this looks like an A1 company. So if you're looking to invest in something or buy something, you're looking ideally for the best of the breed and the best of the best. You just don't want to buy it at all-time highs. So you don't want to get into NVIDIA at $153, right? You want to wait till it is significantly discounted to try and get in. For me, just giving you prices specifically, like I love this $100 price, right? Or right, really at $102. I love $102 from a technical standpoint for a couple of reasons. Looking at a weekly chart, there has been weekly support there on one occasion here, two occasions here. Let me zoom in a little bit. Right here, right there, and right there. We've had weekly bounces off of that 102 area to try and enter NVIDIA if you don't own or if you want to rebuy. Additionally, I love this fib level here at around 97, 96 bucks, right? Because we got some old resistance here, some support there, kind of some support there, probably even a little lower at like 95, 94 bucks would be even better. But you got a lot of old support or old resistance and support there. So I love it there at 95. What I also like to do is go to my studies and go put on the volume profile tool to see where all the volume is. This is better on some other platforms. Yeah, I think like your Godfather entry would be around 90 bucks. If it ever falls there, I would have to go pull out some cash from some other savings accounts and probably load the boat on NVIDIA at like 90 bucks. But in terms of where there's some decent support, where it could potentially fall if its earnings aren't up to par, I think around 102, 100 bucks would be a good entry price for NVIDIA, especially if you don't already own it. That's just my opinion, once again, and that's just looking at the technicals from like a 5-year weekly chart. But yeah, in terms of a Godfather price would be like 90 bucks. And especially I like all this volume right here. I don't think NVIDIA is ever going to get back down to 15 bucks without having some massive collapse. But I like the volume candles right here at 90, around 90 bucks would be like a really, really good entry to kind of load the boat on NVIDIA. But to potentially start buying again, especially if you own some shares, 102, 100, that would be a great level. All right. That is my talk on NVIDIA.
Quick question.
Yep.
At what point do you change entry levels? Because when I know it's been hovering in the 130s, it's gone as low as like 120, but I don't know. I guess my question is, if it doesn't go back down to that level, when do you reassess to say, okay, now here's a new level?
I need to see it break this 150, this high. I need to see it break its all-time high before I reassess. Because once it breaks its all-time high, then I'm going to move my Fibonacci retracements.
Gotcha.
So then because I'm not like saying a discount from like where it IPO'd. It's a discount off its all-time high. So
yes, exactly.
If it makes a new high, then these levels are going to change, specifically the retracements. And so I want a significant pullback off the all-time high, because for me personally, whenever I've bought something at an all-time high, it usually doesn't turn out good for me.
I think that's a pretty safe bet.
Right? I'm not saying that it can't. Like, so if NVIDIA blows out earnings and you bought at 153, it could go up to 160, 170, right?
Yeah, I'm just saying. I I think that's a good practice.
Yeah, in general, right? So
Yeah.
I'm just waiting for something that's a significant pullback. Like when we talked about this on AMD, I don't love AMD. I just talked about how NVIDIA is best in class, and right, and so I own 275 NVIDIA shares, and I never intend to own that many AMD shares because it's not first in class. But
Mm.
look at the discount from the all time high, and
For AMD,
yeah,
yeah, I bought a couple AMD shares.
right. That's what I'm saying. Look at the discount. More than anything, look at the discount, and we looked at the
Yeah.
fundamentals. It looks fundamentally sound too. So,
NVIDIA,
buying a fundamentally sound company at a discount is the best investment strategy for me anyway that I think anybody could have. Buying a good asset for cheap. Like if we're breaking it down to a very basic level. So that's what AMD looks like for me is like buying a good asset for cheap. NVIDIA is a good asset, but it ain't cheap. you know. What else? Apple is a good asset, but it ain't cheap. Microsoft, actually, I've been looking at Microsoft. Microsoft is a good asset, not cheap, but potentially if it gets
I think my
down,
water bottle.
yeah.
Water bottle.
I actually am. Microsoft is actually on my watch. Like if it drops down to this level here, then I'm gonna start watching Microsoft again. If it gets down to like 340, right? But it ain't cheap. Look, it's still hovering at all time high. So I just don't like. Google had a decent pullback. Oh, actually, see, this is a situation where Google, my old fib levels were at 191, and then it popped up. So now what I would do is I'd move my fib level up to the new all-time high to 207.50, right?
I'll put it right there.
So now in terms of what's a discount on Google is going to be a little bit different,
Open it.
right? And then Isaac, you said you wanted to talk about this one specifically. So from a technical standpoint, if we're talking about long-term or a leap, and for those who don't know what a leap is a long-term option. I usually like to buy mine a year or more out. So a more long-term trade or an actual investment, something that you want to hold for 5 years. So I'm just looking at the chart for Google. So I always just look. So we're in a bull market. Ever since we passed this area right here, we went back into a bull market because we keep seeing higher highs, right? We're talking technical analysis now. We're not talking about the fundamentals of Google. I think I went through the earnings a couple of weeks back. Go check out that episode if you want to talk about Google fundamentals. We're just talking about technicals. We're making higher highs on Google, even on a weekly chart. The highs keep getting higher. The lows keep getting higher, right? So Google is still bullish. It is having a pullback, but it's still bullish. So from an entry point on Google, the best entry points on Google have been at this 50-week moving average on my chart. My lines, my green is a 21, and because we're on a weekly chart, this is a 21 week. My orange is a 34 week. My blue is a 50 week, and this is a 200. Sometimes I have the 100 on there as well, right? But because we're on a weekly chart, this is a 200. This is a weekly moving averages. So from looking at the chart, every time it hits that 50, it tends to bounce. Even this one, it came a little bit down, but came to that fib level and bounced up. So I like Google if it hits a significant fib level or if it hits that 50. So that 50-week moving average right now is at like 171.20. So anything between like 173 and 171 I like as an entry point on Google from like just looking at where we are. However, if you see the overall market downturning and we go into like it looks like bear territory, I really like Google at like 150 right here. That would be my place to, if I didn't own any Google or if I wasn't already in a leap on Google, that would be kind of like my Godfather price on Google. Because look, we had a week right here where you had some support at around 150, 147.57, right? Give $2 or $3, right? You had some support right here, right? This was old resistance on these weeks. You had a support right here on this week. And then you had a quick bounce off this level right there on this week. So in terms of a Godfather like entry on Google right now, I would love 147 to 150 would be where I would be trying to buy into Google. But if we stay in this bull market and things start bouncing, I wouldn't be surprised if Google starts bouncing at 172 to 174. Right? Y'all feel me in terms of the technical breakdown of like why I'm saying that? It's just historical data. Yes? No?
That makes sense to me.
Right? So it's like, and I'm not saying it's guaranteed to bounce here. I'm just saying look at where it's bounced previously. That's it.
Yeah,
And
it makes sense.
right, if it's previously bounced there, then those are going to be my entry points where I would think I have a higher probability chance of winning because that's where it bounced before, either at these fib levels or these moving averages. Specifically, it's 50. Sometimes it bounces off the 34. That's probably a good place to swing trade it potentially. But if you want a safer entry, wait till it hits that 50-week moving average. And if you break down on a daily chart, it's been bouncing off that 200-day moving average a lot, which lines up with that 50-week moving average, kind of, sort of. So, yeah, and that's right there at that fib level around 174, which is why I'm saying 170 to 174 would be the place to potentially enter into Google. But if you wanted a low to bow price around 150, 140, 147 to 150, but you might be waiting forever for that to happen, or it might never happen ever again. Right? And because Google is already pretty exhausted. It's not like I usually like to buy something when it's at least under 30, so it could drop a little bit further, but Google's pretty exhausted. I doubt it gets all the way down here unless there's something in the news saying, Trump is going after Google, or they have to sell their search engine or something like something crazy that happened. They have to break up
When
the
do we have
company.
more reporting for Google also? When's going to be the next reporting?
Google just reported, so next quarter sometime.
Okay.
So what? Right here, is the earnings. It had earnings on February 4th. So you got another 2.5 months, 2.5, 3 months.
Got it.
So yeah, that's Google. So last thing, I'm gonna do this one quickly. So weekly stock picks, once again, a disclaimer. It's also in the notes of the YouTube. This is for informational purposes only. This is not investment advice. Investing is risky. Do so at your own peril. Trading is risky. Same thing. This ideally do your own research. And if you have any investing advisors or professionals, ask them before you enter a trade or enter into an investment. But ideally, this podcast is for you to get some more insight so where you can do this yourself so that you don't have to rely on me or anyone else for your entries or what you're going to invest in. So with that being said, what am I potentially swinging this week? I actually had a couple of good swing trades I didn't tell y'all about. I had two good ones and then one bad one. I wouldn't even call it bad. I got out 25% loss, but I made some really good money on the other two. I swung gold, which I had been telling y'all about. I had a good swing on gold where I made like $800. I had a good swing on, what was the other one that I had a really good swing on? Let me pull up my notes. Oh, on JP Morgan. I had a good swing on JP Morgan. I had a good swing on gold, and then I had a swing on Meta that went sideways where I lost 25%. I lost like $300, but I was 2 for 3 using my pullback strategy, and then my loser I lost well, right, which is more of my focus when I'm swing trading right now. It's not like winning, is losing well. Like when I lose, I only want to lose 25%. I don't want to hold longer than that. And we're talking about swing trading, not in my long-term investment accounts, my long-term holds, but specifically in swing trading, my stop loss is at 25%, but I don't put on automated stop losses anymore because there's a lot of slippage when you're trading spreads. So I like to set alerts. And sometimes when I set alerts, if I'm not around or if I'm not paying attention, sometimes I could have a greater than a 25% loss. So I've been trying to work on that area of my trading game recently, is to, when it's at 25% and it's a loss, cut it. Cut it right away. Don't think twice. Don't wait for it to bounce. Try to be a robot. Just cut it. And I'll give myself like a 5 cents of wiggle room on the option contract so I don't beat myself up. But like if I'm 25% down, cut it, look for something else. So what am I looking for this week? Gold still looks good. I don't really like GDX, so I'll probably trade it through GLD, because GDX is the miners versus the actual commodity itself. Gold still looks good on a pullback. Consumer staples have actually been on the rise. So the reason why I like a trade like this is because it's a boring trade. They're not going to be talking about Coke and Pepsi and Costco and Walmart on CNBC. And I like boring trades because it means they're not crowded. So I'm going to probably be looking in the consumer staple area, looking at the stocks this particular week, because those have been really good trades for me recently. And because they're boring, they're not Google, they're not Microsoft, they're not Tesla, they're not sexy. People don't tend to pay attention to them. So I really like something that's trending in the right area that people don't tend to pay attention to. In my past trades, those have been some really good trades for me. And then you have XLC again. This is why I took Meta when I took Meta, but it dipped even lower. So that was one of my losses. But the reason why I took it was because the entire sector, the communication sector, Meta is a big component of that, with Google, dipped, even though it was trending in the right direction. However, what I'm seeing is trending more in that sector, other than the leaders, Meta, Google, and Netflix, are actually the phone companies. T-Mobile and AT&T have been bonkers the last week or so. So that's more of what I'm looking at in the communication sector, and that's really it. I'm even starting to play the stronger trends more than the weaker trends, right? So on this Koifin chart, I'm seeing gold, I'm seeing consumer staples, and I'm seeing communications. Yes, XLV is positive, utilities is positive, but the strongest three trends are in these three sectors. So I'm not playing anything else, regardless of what I see. I want to play the strongest sectors. This is just the way I've adapted my trading this year. I want to trade less trades, and I want to trade them in the strongest sectors. So that's where I'm looking at for next year, or not next year, next week for swings specifically. And I'm specifically staying away from semis next week because of the way NVIDIA is reporting. If it could go either way, tech sector too, because NVIDIA is a big portion of the tech sector. So we're going to see the market move based upon NVIDIA. The one thing that I think is not going to be affected by NVIDIA is going to be gold, right? In fact, what I've been seeing when people are scared, if NVIDIA tanks, what do I think is going to go up? Gold, because it's one of these safety stocks, right? Or safety portions of the market. So if people are scared in tech next week and gold has a pullback, that's where I'm going to be looking. And in fact, I already have an alert here. I love that 2,800 level in general because it's a nice round number. And I'm going to probably look at this a little bit better on Monday to see where it's at. But I love it if gold pulls back to 2,800 to take that right back up. So I like gold, and you see I look at the futures because it's open 23 hours a day, but I won't trade the futures. I will trade through GLD, which essentially looks just like the futures, right? And then I'll kind of map the price to the futures based upon what the futures are doing and what GLD looks like in terms of like the price matching on like a 5-minute or a 10-minute or a 5-minute or a 30-minute chart, right? So I like gold next week. The other thing, let's look inside XLC. XLC itself looks good. I would trade XLC on a pullback. I was looking at this last week, and I can tell because I got my levels already drawn. That's how I could tell what I was looking at last week already. I like XLC on a pullback, depending on where it looks like it is on Monday. But XLC itself, sometimes though, the options are not liquid on XLC. Meta looks more flat, but I got in. This was my trade last week that didn't go so well. But you see, the reason why I got in is because it was a strong trend and we had a pullback. I think I got in on this day. It was a big pullback day on a strong trend. I did lose. I don't win all my trades, but once again, this was a great entry for me. And me, I'm just trying to be robotic. Like, I'm not going to win all my trades, but I want to make sure that I'm getting in on ideal setups. And that was an ideal setup. Meta was in a strong trend. It pulled back significantly on that day. I got in right there at the bottom, and then it kept going down. So I got out. 25% loss, but it was an ideal trade for me on a spread. But look at what I was saying. Look at AT&T's chart. That's why I have alerts here, because this is something that I'm looking at on a pullback already. Look at how strong that trend has been. So I'm looking for a pullback on that strength, and the entire sector is trending. So I really like AT&T, and then T-Mobile as well. Look at that strong trend, but AT&T has been stronger, right? So if I had to grade what I'd get into AT&T first, T-Mobile second, and then XLC third, depending on where they pull back. But that would be like my priority order, right? And the whole sector looks decent, right? Like you got a couple of down names, but Google's down, but Meta still looks decent. Netflix looks decent, which are some of the heavier weight names. Verizon looks decent too, right? It's trending later than T-Mobile and AT&T, but it looks decent. Looks like it's headed in the right area, so or the right direction. So I like XLC for next week, and then let's go look at XLP. And for me, I would just tell you guys, like, go build these charts out for yourself. I did it so it's easier for me to look at an entire sector at once. Look at Coke and Pepsi. Look at Coke. So Coca-Cola. That's the one for next. Let's see. What does Colgate look like? No. Target. And it's a recent trend. So this is one of the things where I'm saying I like to be in the market in a place before everyone else starts realizing that this is an area that's going to start to trend. The entire sector went from neutral. I just know from my indicators, it's yellow is like neutral, and then both having green momentum and green trend. This is starting to trend bullishly in the entire sector, and the strongest name right now in the entire sector from what I'm looking at is Coca-Cola. Look at that strength right there. So I'm looking for a pullback in Coke next week. I would want to maybe see XLP get above 82 bucks, 82.12 before I would actually trade XLP itself. And then maybe Costco, but Costco is usually extremely expensive, so I probably wouldn't trade it for that reason because it's really expensive. And then what's PM? This looks really good too. I don't even know what company that is. Philip Morris. Oh, because it's smoke. It's a cancer company. Smoking. So if you want to make money but you don't care about the social ramifications, Philip Morris looks really good too. Look at that chart. I don't know why. Apparently people are buying more cigarettes. Is it liquid too? Let me look at the option chart. It's not that liquid though. So I wouldn't trade. No, it's not liquid. I wouldn't trade Philip Morris because of the expensiveness of the options that are expiring on March 21st and the liquidity in some of the less expensive options. So for that reason, I wouldn't trade Philip Morris, but it looks good. If you have a more expensive option account, then maybe you can do it. But I didn't like the spread either. So, but Coca-Cola, we go look at Coca-Cola's option chart. Yeah, Coca-Cola isn't that expensive, and it's mad liquid, right? Even the third Friday, which is OPEX, which is generally where I like to buy my options. If I am buying options, meaning buying a call, and then if I'm selling a spread, They have some liquidity here. I don't know. It would depend on what price that I'm buying at. But there are some calls. It looks like that would be the easiest way to get into the trade would be buying March 21st calls at 70 or 67.5 where there's sufficient liquidity because the open interest is at 14,000. So Coca-Cola. So if I had to say my watch list for next week that I'm building, it's pretty much what I just told you guys. So I'm looking at gold. I'm looking inside XLC. I'm looking at the phone companies at AT&T, T-Mobile, and then maybe XLC itself. And then I like Coca-Cola and potentially XLP if it can get above like this $82, $83 mark right here. Right? So those are what I'm looking for pullbacks on next week. And if they pull back significantly, those are going to be stocks that I'm looking to enter and swing to the upside, especially as NVIDIA earnings come up. XLP specifically is safety stuff, investing in Coca-Cola and Pepsi and Procter and Gamble and Colgate and Costco and Walmart. Those are safety stocks. So if people start fleeing NVIDIA next week, if their earnings aren't that great, then I wouldn't be shocked to see gold and the consumer staples sector head in the other direction as people flee to safety. All right, that's it. Any questions? Y'all feel me in terms of my reasoning, my logic, what makes sense, what doesn't make sense?
Absolutely. Appreciate the game as always.
All right.
Yeah, man. That's questions on mine either.
Yep. All right, folks. Mokama Sunday service, making it rain without the umbrellas. We are here every Sunday at 8 a.m. My bad for missing last week due to a death in the family. But yeah, we're here and we're talking about the market, whatever's coming up, to try and help you make some sense of all of this data that we get every single week. But yeah. All right. I'll talk to y'all. Deuces.
Take it easy, man.
Yeah.
Hey, brother.